Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets trade at the lowest point of the day. The Nifty falls below the 12,000 mark. Signs of call writing seen in the options market. Yes Bank is the top loser in the Nifty after Moody's downgrade. The stock has been down for the last 4 trading sessions. All sectoral indices trade with cuts today, with Nifty PSU Banking Index being the biggest laggard. And Gati reacts negatively to All Cargo's approved acquisition of the company. All Cargo will also propose an open offer for the remaining 26% stake at 75 rupees per share. Good afternoon, Neeraj. We're at the lowest point of the day, and we've breached the recent lows also, and we're trading below the 20 DMA.
Yeah, and why this shouldn't surprise a lot of people, simply because the market has to react to sometimes unknowns. And yesterday's policy was an unknown, even though we thought for the first 1 hour that market has digested it well. We're now seeing the pitfalls there, and banks are leading the charge yet again. 2 days on a trot now. It's the banks which have corrected. And mind you, I mean, people who look at plain simple day move 150, 200-day moving averages, we're still some time away from the support, or some levels away from the support. So no dramatic things out there, but we're trading at the lowest point of the day. Just want to juxtapose this against what's happening to the world markets. So if we can pull up what Europe is doing right now, or what Asia did, or what Dow futures are showing right now, you will see a difference. There is a fair degree of green in the European markets. The Dow futures also are not really gyrating too much negatively in any fashion whatsoever, about 51 odd points. So we have our own issues to contend with right now. Bring up the heat map and let's see what's dragging the charts. It has to be banks, but the color of red is just overpowering right now. There is only a few handful of names like a Bharti Infra, which is up about 4.5% worth talking about, a Kotak Bank, and to an extent Infosys and HCL Technologies giving that bit of a support. But even IT has taken a bit of a backseat because it was very close to some points of resistance. ICICI Bank, a strong name, down about 1%. Axis down another 1.5%. State Bank of India down 4% in the session today. There is weakness in Yes Bank, Z, GAIL, Bharti Airtel 2 days or 3 days on a trot has been correcting, and strong names like Bajaj Finance, which are in the green, are also in the red right now. So overpowering this tick of red on the screen right now. Whether it changes remains to be seen, but a clutch of names looking like they're under some serious pressure in the session today. The broader markets too, likely, Devina, would not really have a big gung-ho day.
No, most likely not. And towards the end, you could actually see if things don't improve from here, that gap, that advance, the breadth of the market could actually worsen. So for the index, for the Nifty Mid-Cap Index as well as the Small Cap Index, it's not a very great day. In fact, the Nifty Mid-Cap Index is down 1.3%, while the Small Cap Index loses closer to 0.75%. Coming down to individual stocks, All Cargo Logistics and Gati, 2 stocks in focus on the back of the deal. Gati is down 4.5%, while All Cargo Logistics holds fort, 3.25% higher in the session. MMTC, for one, is a stock in focus. It's trading at its highest level in 11 weeks, with volumes of more than 50 times its last 20 days average. So watch it for that stock. Other movers in trade include an ICICI Securities. This stock over the last few days, in fact the last 2-3 months, has been a mover on the upside. 353 on ICICI Securities, and it's active with today's session. Colgate sees an uptick in today's trade, so closer to about 2.5% higher for Colgate. And Credit Access Grameen, after seeing some selling pressure last week, it's bounced back, but not a marginal uptick in today's session. But it's a falling market, so holding for and gains of 1.5% are more than welcome on any stock. Some profit taking seen across the board. So Polycab is down a full percent in today's session after that big move in yesterday's trade. Inox Wind also trades lower by 7%. And Magma FinCorp, which up until now, I think for the last 2 weeks or so, which had been gradually moving higher, is seeing some profit taking and is down about 5%. Other big losers include the likes of an Omax, which is at its 52-week low. It's down 20%. Dish TV also looking weak, and RBL Bank is down about 6.5%. Other stocks which are trading somewhere closer to their 52-week highs rather is City Union Bank. Remember, we spoke to the management in the morning and they were talking about how they're choosing to be conservative with regards to growth. The stock's up about 0.5%, PI Industries and Narayana Hrudayalaya are all near their 52-week highs. What else is moving in the futures and options space? Navneet is going to highlight that for us. Navneet.
Thanks for that, Divina. Well, the internals as of now are not looking that great. While for majority of the session, we were seeing India VIX trading with cuts. I think that's now trading with some bit of gains as the market also trades at the lowest point of the day. 14.4 is where India Volatility Index is sitting at. Pull up the futures. Remember, yesterday, as we were highlighting, markets seemed to have digested the monetary policy news well. But today, if you look at the activity, there was unwinding seen on both Nifty Bank, Nifty Futures. Premium 2 had fallen, but right now, you are seeing some bit of build-up. Let's see towards the end these fresh positions get carried forward or not. So just 4% higher for Nifty Futures. Open interest for Bank Nifty also, it will just come up on your screen. I think just about 2-3%. So actually this is giving you signs of maybe unwinding of longs then, because this is a very small number as compared to what we usually see in a falling market. Looking at the options data, and goes without saying, as we highlighted, the clear signs of call writing coming back into the system, and the base has moved lower by 100 points. When we started the day, we told you ranges between 12,000 to 12,100. As we've reached the 12,000 mark, we are seeing 12,000 call adding at least 18 lakh shares, and the 12,100 call strike is also seeing fresh writing in trade. 16 lakh shares have been added there, and put writing has shifted to 11,900 today, which has added nearly 5 lakh shares. So the range is now, I think, on closing basis, we should monitor if 11,900 can be defended or not. In terms of individual stock futures, well, banking stocks all the way. RBL Bank is witnessing fresh short positions, both price as well as open interest action seen here. It's been trading below its 100-day moving average. For State Bank of India, the stock's down 5% so far for this week, and we are seeing signs of shorting coming by as the open interest is up by 8%. The stock right now is seeing cuts of 4%. And Berger Paints, interestingly, we'd highlighted in our F&O show as well, the stock right now could be off the day's high considering the markets are trading lower, but the discount that the futures were trading at when we were doing the F&O show around 10:30, it was 7 to 8 rupees. So that discount has fallen to now 5 rupees. Stock is trading right now with gains of 1%. There are some signs of fresh longs being created here.
All right, I think Berger Paints in the morning session was also Shubham Agarwal's recommendation with regards to a trading position there. But let's bring on our market guest, Aashish Wakankar of EquiPoise Capital Management is joining us right now on the show. Aashish, thanks very much for taking out the time. We've made those record highs, but it looks like we're not being able to digest it.
Yeah, I mean, the markets may be, honestly, personally, I don't look at markets on a daily basis.
No, sure. The structure still seems positive.
And I've been an analyst more than a forecaster. So the way I look at markets is as long as the fundamentals remain intact and the markets will respond to that. So the concern in the markets, if you look at, say, about a month back or 2 months back, was, we kind of missed the rally, the rally that took place in the month of October and November. Post the corporate tax cut, you had a rally in the market, and most of the people at that time had a left out feeling. Now you have a market which has gone up and correcting. So now the concern is that the market's coming down. So I guess the way we look at things is look at your stocks, the portfolio that, or the ones that you like, and every opportunity in the form of correction or in the form of movement downwards. If the valuations is good and if there is value still there, just definitely buy on dips is, in particularly to the extent of your portfolio that we created, is what we would do. So I think those who had this left out feeling, they should be actually happy rather than be worried.
That also depends from portfolio to portfolio, right? So if you're more large cap bent or you're more mid cap bent, how do you then position?
I wouldn't, break up the portfolio into a large cap bent or a mid cap bent. Rather than that, I would say. So what has happened in the last few months is that quality has gone up quite significantly, and you have seen around 10-15 stocks which are ruling. But does that mean the others are really bad?
No, they're not. They're picking up actually.
The performance of the portfolio would have done well if you had a large cap bend, right? I mean, so last 12 months it's been difficult to beat the Nifty for a small cap fund.
That's fine. So that's a short-term view. We don't take a short-term view over here. So for us, the portfolio that has been constructed, for me particularly, the portfolio of the stocks which I like, irrespective of whether they are large or mid caps, if there is an opportunity, I take a 2 or 3 year view, and focus on that portfolio rather than trying to time the market and say that that this is corrected quite significantly now and I get more worried about it. I don't get worried about it.
Okay, sure. So what we're trying to understand right now is, in a market like this, for people who had that left out feeling, this could probably be a good entry point with a buy on dip kind of a view. So in light of that, how should one position the portfolio then? If you're saying don't go by a large cap or a small cap or a mid cap bend, then how does one construct a portfolio?
The portfolio should be constructed basically on the basis of your analysis and on the basis of where you see extreme value. The portfolio, rather than saying that I'm going to be large cap focused, or rather than saying I'm going to be mid and small cap focused, portfolio should be agnostic to the market capitalization. Portfolio should be based on where you see value the most.
Okay, so where do you see value?
Across. I mean, the portfolio that we have right now, I see value across. And only thing is, does one have patience? If one has patience, then obviously one can look at those stocks in the portfolio or in the market which are offering value. Now, there are good stocks right now which have even good dividend yields. One can take a look at. So depending upon where one is positioned, the portfolio can be constructed.
Yeah, but we're talking about your positioning right now. So where is it that you find value right now? Across the board would be a very large bucket. So what is it that looks the most attractive? If you, let's say you got a set of money and you have to park it in, you already have a portfolio. Where is it that you would believe would be the first ports of call for investors?
So predominantly the portfolio, the way I have been constructing, have been in large caps around say 65 to 70%, and the balance in small and mid caps. For a simple reason, any portfolio that is constructed should have a multi-cap approach rather than having a specific large cap approach. So. Yeah. The mid caps and the small caps generally would end up giving you kickers, but stability and liquidity into the portfolio definitely comes out of the large cap. So in any market, a portfolio that I have constructed would predominantly have a large cap bias close to about 65%, 70%. And that's exactly what I'm talking of from my history. I mean, what I have done even in the past.
Ashish, the universe is pretty large. If we are close to now record high levels, I think the rally was polarized. It was a handful of stocks which have rallied the Nifty where it is. Mid-cap, small-cap indices are trading still at 30-40% to the high levels that we had seen in 2018. The question then is, which large cap, which mid-cap, or any particular theme according to you where you see value? Because, of course, there are a couple of stocks which have not performed. If valuation is giving you comfort, for example, you mentioned high dividend plays, Coal India looking good to you because that's not given returns this year.
So, you know what, I'll rather stay away from speaking on any particular stocks, but I'll just share with you an exercise that we carried out very recently. Are we talking of an economy when the government keeps on, expressing its desire to take the economy from the current $2.8 trillion to close to about $5 trillion economy? We did a simple exercise on the basis of if the economy were to go to $5 trillion, what would be the Sensex or the market be at that time? So what we did was we took a simple ratio, and it's like predominantly used in the market, for the price to sales ratio. And we tried to bring out a correlation between the Sensex and the GDP. So what we see is that if currently the GDP is close to about $2.75 trillion, if it were to go to say $5 trillion, the index movement, now the period is what you need to figure out. Where it will be. So I'll answer it in two parts. So if the economy moves from 2.8 and the index is now 40,400, it moves to $5 trillion, where would the Sensex be? And our number is significantly higher. It comes to close to about 85, 86,000.
Okay.
In what period? So assuming that the real growth is close to about 6% since we did the correlation from analysis from 1993 till date. The average, the real growth in this period has been close to about 6.6%. So we take 6%, and if you look at inflation at say around 4%, you're talking of a 10% nominal growth.
Correct.
At a 10% nominal growth, you would have the GDP moving from 2.8 to $5 trillion in close to about 6 years. The current number is 4.5 or 5%. We put a number of inflation of 4% even over there. So 6.5 years is where you will see the GDP moving from, even at a conservative level, from 2.8 to $5 trillion. That number gives you a CAGR of close to about 13%. if that is the return that the market is going to generate and the economy is going to move from 2.8 to $5 trillion, which are the sectors which are going to benefit out of it? It'll essentially be domestic sectors.
Okay.
It cannot be export oriented. Secondly, what is going to fuel this growth from 2.8 to 5? It has to be external savings. So global investments, whether it is FDI, whether it is FPI, whatever. Basically, external savings is going to drive this. We have recently seen the corporate tax move down. So for companies who are going to set up, manufacturing facilities post 1st of October, the rate is down to close to about 25%. This has been done basically to try and see if India can benefit out of the US-China trade war and these companies can set up manufacturing facilities in India. These companies are not listed, but the second derivative of that is definitely going to be on consumption. So if we believe, and we believe, it's just a question of not if, it's when. And that anybody can play their numbers over there. You can take your own guess, take a 4% inflation and decide whether the real growth is going to be 5.5, 6, and then base it on that. You will find that the sectors which will benefit out of this growth will definitely have to be of domestic nature. They cannot be export oriented, because the ones who are going to drive the exports are essentially not in the listed space. So this is basically where we are.
Okay, we leave it on that note, Aashish. Thanks a lot for joining us in the studios today and taking us through your views on the market as well as the spaces which can outperform in the coming days. And lastly, his view is positive going ahead. All right, let's shift focus to a corporate a stock which has been in focus at least in the last 3 months, which has been giving you strong returns. And we're talking about Repro India. The stock's up close to 40% in that period. Well, with this surge, it has also covered its losses for the year, and it's up now 25% in the last 12 months. What is working for the company? Let's ask Mr. Pramod, the Executive Director of the company. Hi, Mr. Khera. Good afternoon, and thanks a lot for joining us today on BloombergQuint. Just looking at your first half numbers, sir, the top line growth has been in single digits of 5%. Top line growth, I'm presuming, could have also been boosted due to corporate tax rate cut. But you've managed to expand your margins, which were at 12.5%. Tell us, is the second half of this financial year looking better for you compared to the first half?
Yeah, sure, definitely. But I think what is more important is to look at how our one book, the e-retail business, is growing. So if you see quarter on quarter, that has grown from 9.86 crores to 11.87 crores, which is a significant growth. And the previous quarter was 8.23 crores. So that's our focus. Whereas our print business is remaining at the same level. This new business which has now started kicking in terms of contributing to the top line. And the new business, since we also broken even and EBITDA positive we have become, it should also start adding to the bottom line.
When you say new business, are you talking about the digital segment? Has it started contributing already to your bottom line, or how many quarters away from that?
Yeah, so like I said, I mean, we have broken even a couple of quarters back, and now it's slightly positive, and that will keep on increasing as we go along with the scale.
Okay, give us a sense on the other segment, which is print on demand, and a lot of analysts have been, bullish on this segment. How is that panning out for you? What's the contribution from this segment currently?
Yeah, so that's the digital business that I've been talking about. So if you see our quarterly revenues, 12 crores has come from this POD, the new business, out of the total revenues of say 98 crores in the quarter. So and this is growing. Like I said, now since this business has become EBITDA positive, this is definitely going to add to the bottom line going forward.
Okay, it's EBITDA positive right now. So give us a sense what sort of revenues you're doing currently on monthly basis, and also what's the average selling price of a book for you right now?
So we are doing close to almost last quarter we did around 3,600 books per day, right, on POD. Now, this translates into almost, we can say, if you take an average selling price of around 280 to 300. So that's how it translates to around 11 odd crores for the quarter.
All right, Mr. Khera, that's here and now. Let's talk about what lies ahead for you as a company. The market seems to be liking something, and therefore the reaction to the stock price. What is the bigger game plan at Repro in terms of making sure that you meet those growth targets, internal growth targets that you've put forth for yourself? What is the kind of expansion plans that you're looking at? If you do have an internal target to achieve in terms of top line growth, bottom line growth, margin that you would like to target, could you highlight that for us?
Yeah, sure. See, one of the key investment that we've been doing over the last couple of quarters is the plant in Delhi, which has now become operational. And in the next quarter, by end of this financial year, it will be fully functioning. So that will contribute to the top line, because once you replicate the same book, suppose you are selling from Mumbai and also sell from Delhi, and are able to deliver within 24 hours. So that's that's the capability that will come in once Delhi is fully operational. It should improve our sales significantly, because we'll be able to cover a larger part of the country from Delhi, north as well as some parts of east. So that is the immediate boost that we should see coming in for the top line. And going forward, as we move along, we also have plans to set up one similar facility for one book for POD in the south. And once all the three, so we already have one in Bhiwandi, which is the west. So once all the three plants are operational, that should cover almost 75-80% of the country. And that will give us a very good platform from where we can really take off.
Sir, just can you total up the capacity for me in terms of all these three plants once they actually get operational? And while obviously this reduces the backlog of inventory because it's going to be on demand, can you talk about how what kind of demand is there for print books versus e-books right now?
Okay, so I think the three questions that you have asked me there. So I'll go in the reverse order. Print books versus e-books. E-books market in India is a very, very small market, highly a fraction of a percentage point. Whereas, yes, this trend is going to increase, because in the developed markets, certain segments, it has gone up to almost 20-22% of the overall book sales, but it has stagnated there. In fact, it is coming down. So people are going back to printed books. So we don't see too much of an impact coming from ebooks. However, we also have the capability to produce and sell ebooks, which we are doing. So that's as far as the ebooks is concerned. And in terms of our proposition that we have, like you rightly mentioned, it's zero inventory, correct? So we are able to sell a large catalog without having to invest in working capital or block working capital in inventory. For the publisher, it makes a lot of sense, because typically a publisher just sells around 10% or 15% of his titles, which are the fast-selling titles, and he keeps inventory of that. So the rest of it becomes either out of print or very slow-moving, whereas we are able to sell 100% of the catalog, and thereby we are able to increase the market. A lot of lost sales which is happening for a publisher gets captured. So that is the real essence of the whole one-book model. Also, even the titles which the publisher has printed and is selling, many a time they go out of stock. And since we are on print on demand, we chip in and we can again fulfill those orders without the publisher having to lose any orders. So this is what the publishers are really liking about. And along with this, through Ingram, with whom we work very closely, and they have a presence in the US, UK, Australia, we are able to sell the Indian books in the global markets. So that again is something which we're giving a global platform for the Indian publishers. So these are some of the things which is helping us to really aggregate more and more titles, more and more content, get more publishers on board, and that is contributing to the growth.
Your global plans, sir? Since you mentioned you want to make a global presence felt, what are your big plans for? I think you're already making inroads into Africa. What are the big plans there?
Yeah, so as far as Africa is concerned, we've been there for the last more than 10, 12 years, but that is primarily for printing and printing of large volumes on offset. However, in this digital business, there are two ways we are addressing the global market. Like I said, one, giving a platform for Indian publishers to sell their books outside, because now with a huge Indian diaspora in a lot of parts of the world, there is a demand for Indian books. And we are able to fulfill that through print on demand, through our partners. And the second is a lot of international publishers. They are looking at the Indian market, because the Indian market is the sixth largest market for books. And a lot of publishers, they have never really sold their books in India. And we are able to work with them, get their titles in, and sell them in India, thereby giving them access to the Indian market.
Right. Mr. Khera, just a couple of questions. One, have there been any investors which have bought stake in the company in the last few days? I mean, the results were okay, but the stock has been on a bit of a roll. I wonder if there is a shareholder element attached to this. Any idea about this?
We have a few large investors, and they have been around for quite some time. And I think the last quarterly results that we announced, where, like I mentioned, the trend which we've been talking about in terms of growth of the print-on-demand business, that has panned out pretty well. Plus, our balance sheet has become quite good in terms of our debt has reduced, our debtors have come down. I think that is what is really exciting the investors, and they are looking at this stock quite positively.
Debt level, Mr. Khera, and what do you expect it to go down to by, say, March 2020?
Well, we do expect the debt to come down further, and whatever expansion plans which I talked about, that's already funded through internal accruals and the preferential equity that fund that we have raised last year. So there will not be any further need for increasing the debt. And since this new business does not require any working capital, we expect our debt to keep coming down as we go along.
Last question from mine, at least. The books on demand target for the year at large, I heard you say that you reached about 11 crores per month. What do you expect to end the year with? What could be the run rate as we close down March?
Around 11.8 per quarter, not per month.
11.8 per quarter, and, yeah. How much does it go up to?
So that is coming by selling around, say, 3,000, around 4,000 books per day. With the Delhi capacity coming in, we and Bangalore for shipping, we would be able to sell almost 20,000 books per day. So that's the type of scale we're looking at, which should come over the next foreseeable time frame.
5x? By 5x by March, you're saying?
Not by March. See, we don't give a forward-looking statement.
Just a ballpark estimate.
Yeah, but definitely that's what we are aiming for in the foreseeable future.
Well, are you already getting the feel of that kind of demand that you'll be able to service 5x the quantum?
Yeah, so see, it's a factor of replication. Like I mentioned, if we are able to replicate in Delhi and South, we'll be able to really get in more customers buying the same books. So we'll be able to sell more, even with the existing titles that we have. That's one. And second, the second aspect is we are aggregating more and more titles. So we're getting more and more publishers on board, which is adding to the top line. So these are the two things that we're focusing on, and that should help us to really the capacity that we build up, we should be able to service that from the demand that we generate.
All right, Mr. Khera, we'll leave it at that. Thank you very much for joining us. Really appreciate you taking out the time, and all the best for the big expansion plans that you have. as the management at Repro India. The stock's been moving up over the last week or so. In the last 3 months, it's been up about 34%, but the last few days have actually been the big money churners in terms of the stock price move. Today, taken a little bit of a backseat. Moving on, the government has issued a clarification on the amendments it introduced to the Foreign Exchange Management Act. The mutual funds industry was seeking clarity about the classification of foreign-owned domestic mutual funds as investment vehicles under the Amendment Act. Paswani Upadhyay now joins us for more on these clarifications. Paswani, when this came out, there was the big hue and cry as to, what's going to happen, and was this just a mistake and was overlooked, and was it going to be retracted? What's happened now?
Well, we have seen a retraction within a month from when the rules were notified. Essentially, what the November rules had done, Divina, was they had created a distinction between mutual funds, domestic mutual funds, based on whether they were foreign-owned or domestic-owned. What that meant was some of the foreign-owned funds like your Mirae, BNP Paribas, HSBC, they got categorized into the category which then meant that their investments would qualify as indirect foreign investment. And that was done through a definition change of investment vehicle, which was changed to include mutual funds which invested more than 50% of their corpus in equity. Again, there was a confusion on whether you consider this at an AUM level or at a scheme level. Now, what that meant was that investments by foreign-owned investment vehicle, like I said, got categorized as indirect foreign investment. And then such vehicles needed to comply with your FDI sectoral caps, your entry route, your pricing guidelines, and many such onerous requirements. The revised rules have now done away with this, categorization of foreign-owned mutual funds. The definition has been modified, and MFs investing more than 50% in equity would continue to get governed by SEBI's mutual fund regulations and will not fall under the definition of investment vehicle anymore. This was, of course, after the November rules, there were several of these mutual funds that had approached SEBI to make sure that this clarification comes by. And I suppose we are back to the original sort of position where there is now no distinction based on the ownership of the mutual fund, because essentially all the money that they are anyway investing is domestic money.
Rightly so, you would say, Paswini, and we were speaking about it when it came out as well. It seemed a bit outlandish to classify them that way.
Correct.
Okay, great. Thanks so much for putting that into perspective, and some bit of relief, frankly, from a market's perspective as well. This is very,
I think no one
important.
really took it to be something that would be put into practice as such. It was just considered to be a definition or an anomaly to the classification.
Yeah, but you can never be sure until
you're
comes
sure.
out, right?
Yeah, well, okay. Thanks, Paswini, for joining in. Okay, let's move on. And the market's reeling under pressure at second day on a trot. Good time to get in our technical experts on board. Brijesh Singh of StockAxis with his thoughts on how he's seeing the trends right now. Let's start off with him. Brijesh, how are you viewing the last 2 days, and does that open up more downsides?
Good afternoon, Neeraj. Now, after a long consolidation on a range of 11,900 on downside Nifty, and on a higher side 12,050 or say 12,100, the range on the downside has been broken, and that too with increase in volume. So right now the market is in the grip of a little bit of on a bearish side. Now again, the previous swings lows would be acting as a supports, so we would be looking for 11,770 to 11,790 as a band of a support. Whereas on the higher side is being concerned, immediate basis 11,950 followed by 12,050 are the two resistance zones. So at the time of posting my call for the Nifty spot, the value that time it was been quoting somewhere around 11,952. So I think within 15-20 minutes, that 50 points has been wiped off. Right now, Nifty spot has been quoting somewhere around 11,900, if I'm not mistaken. So taking the present value, if someone wants to play for a sell side, keeping a stop loss of 11,950, one can go on a sell side, play for the target of 11,800 and below. Time frame to hold would be till Tuesday. I think this bear would be making a Monday also, a little bit miserable for the bull side. So chances are that the first half of the Monday morning might be in the bear grip.
Okay, while we've definitely breached some important levels today in terms of support, so 11,900 is also taken out as we speak. When you're trading around the record high levels, 20 DMA becomes very important to monitor. And in the last two sessions, when we breached that, index rebounded from those levels. But this time around, there are no signs of buying. In fact, we're only grinding lower, breaking away more levels. 11,893 index at day's low. Brijesh, in a market like this now, would you bet on any individual stocks to trade on?
Good afternoon, Navneet. Say, two calls are there, both on our sell sides. The first call is from a Gale. Now, in today's session, we have seen stock making a new 52-week low. Increase in volume has been there in an hourly charts with the lower highs formation indicates more pain to come through. Somewhere around 117. It's been trading, if I'm not mistaken, or 116.5. One can go for a sell side with a stop loss of 120, play for the target of 112. Another call would be PFC, as we have mentioned, for the 200 simple moving average, and I always precise 200 simple moving average has a weightage on when you are trading as a swing-based trading has been concerned. So PFC has been trading below this 200 simple moving average on a daily chart as well as on the weekly charts, which are somewhere 113 and 109.5. Right now it's been quoting somewhere 108, so one can go for a sell side with the stop loss of 111, play for the target of 103. Both the call time frame would be hold till Tuesday.
Two sell calls coming in from Brijesh, one on Gale and the other on PFC. Just want to highlight your heavyweights which are falling. Probably these are the stocks which is dragging Nifty lower today, and they all are your financials. So SBI is down now nearly 5% right now. HDFC, after a while, you're seeing a cut of about over 3% coming up for this stock as well. Pull up, but TCS and Infosys, let's see if there is any support, because since last three sessions we were seeing TCS and Infosys lending support to Nifty, so that's also given up some gains, though Infy still holding up marginally in the green. Let's bring in our fundamental guest in the show, Anand Tandon, who's a market expert, joins us now. Hi Anand, good afternoon. Looks like a delayed reaction to RBI's shocker yesterday as markets correct quite sharply. What is your reading been after RBI has clearly shrugged off growth prospects and focused clearly on inflation?
Well, yeah, I mean, I think it's a misplaced fear. If you don't have growth, I don't see how you're going to get inflation. Of course, food prices, etc., tend to follow whatever the government wants them to. There is nothing like core inflation in this country. All of the inflation is managed by the government. So to really try and be very nuanced about it is, I think, missing the wood for the trees. But anyway, their mandate was to keep inflation under control even at the cost of growth, and that is what they have done. And clearly, I was surprised to see the market being robust yesterday. It should have fallen off, but I guess there was some short covering perhaps. Today, it is actually doing what it should, which is to continue to fall.
So do you expect more fall from current levels, Anand, or we are done with record high levels till this year ends now?
Well, that's always difficult to forecast because you can't predict what a whole bunch of people from outside will do with their money. From an emerging market perspective, it will perhaps, hopefully you are still arguing that the emerging markets will do better than the developed markets over the next 24 months, because there the numbers have perhaps peaked out as well, and you are looking at a slump going forward. Whereas here in emerging markets, probably there is already been a slump and you are looking at numbers improving. So from that perspective, you may want to see money coming into emerging markets, and India will get its share of money coming through. But from a domestic market perspective, I don't see anything that will drive the market up. The earnings have not yet come in. The interest rates remain far too high. And you have now a bigger fear, that is that the GDP is falling below the interest rate. The nominal GDP growth may fall below the nominal interest rate, which is one of the biggest problems in terms of getting into a debt trap. So one hopes that it will correct itself soon, but till then, that's one more thing to worry about.
Okay. Anand, the last few days, the banks have been the key pivots of support for the indices. With this outlook around rates becoming a bit fuzzy and growth outlook was anyways a bit fuzzy, would you fundamentally believe that this whole argument, I want to understand if you would still buy into the argument of corporate-facing banks moving up over the course of the next couple of years, and if that is indeed the case, then these dips that are coming in, would you use them as an opportunity to buy if you have a slightly medium-term horizon?
Niraj, I think that argument remains. Two reasons. One, of course, the fact that you are already arguing for the fact that there will be an increase in the profitability going forward because the MPA cycle has probably played its way out, and there may be a few surprises here and there, but by and large, the trajectory of profits has to be on the way up. The other thing is that there will actually be a market size increase for the banks largely because the NBFCs have moved out of the system and they're unlikely to return very soon. I mean, there is still no great lending that is happening from the NBFCs, and they were the largest chunk of the lending market. That has to pretty much go back to the banking system. So there is opportunity for growth even if there is an overall slowdown in terms of the economy. If you see the numbers that are coming through, the credit growth is actually increasing. And in fact, many of the smaller banks may have trouble in terms of growing because they don't have capital, not because of lack of opportunities. So broadly, I think corporate-facing banks should continue to do well in terms of both being able to grow their loan book as well as hopefully improve their NPA till they hit the next NPA cycle. So for the next 2-3 years, I think the cycle should be in their favor.
Okay. So maybe go out and try and, I'm just wondering if these are the dips that one is watching out for and looking to buy into those. So that is one. The other bit, and before we get in, Pritesh Mehta is in the conversation as well. Anand, the other bit is the statements that have come in today on telecom. Now, for the Aditya Birla Group to go out and say that unless the government comes in, it's going to be a really difficult thing to carry on. This has now happened twice in the last 20 odd days. Would you believe that, one might feel sorry for the business, but you are out here to make money. Would you believe that this makes the case for logging into a Bharti Airtel or a Reliance Industries even more stronger?
Well, the case for buying Vodafone was, more a hope trade than anything else, because the balance sheet is so stretched that you have to really assume that somewhere manna will fall from heaven and rescue them. They also have the worst technology. They also have they are the ones which are probably one of the priciest in the market. So you're going to lose market share continually from even here on, even if you assume that there is more money coming in, because the money will just go in terms of improving their technology and etc. So there is really not that much that you are looking at to be bullish. Mr. Birla's statements, to my mind, appear to be in a manner that will pressure the government into doing something. And therefore, it's almost a kind of threat that he's holding out, that do something, otherwise I will lose money. The fact is that they have sunk in large amounts of capital, and shutting it down is not going to help them in any way. But of course, if there is no path to profitability, putting more money after bad is even a worse decision. So while it makes logical sense where they are, you have to assume that there could be someone who comes in with a bigger checkbook who is willing to try and fight back. But I don't put too much stress on that. From an investor's perspective, why bother about all those kind of posturing? The reality is that only Bharati is a pure play telecom player who has visibility of profitability, and therefore should be something that you should have in your portfolio. Jio, when it splits out, will obviously become equally attractive.
Okay, that is the telecom space, which seems to be under some bit of stress, but which sector isn't under stress in today's session? The Nifty Bank is down 1% plus 365 odd points given up. Pritesh Mehta of Yes Securities is joining us on the show as well. Pritesh, what would you do on the index? We seem to be just about those support levels, come back above 11,900 now, but still a massive 100 points given up. Would you go short from here?
Now see, after a big rally, market will always run into resistance. It will always run into hurdle. And this is the normal market cycle process or a phenomenon. A trader should not make mistakes during this process to create positional shorts in the market. Yes, there is opportunity to create trading shorts, but I still make a case that there is no need to create a positional short over here. See, over the period of last month, we had a very good time. We Nifty bounced from the lows of 11,090, in matter of weeks we went to highs of 12,100 and above, but thereafter inability to sustain about the 3-digit GAN number of 12100 led to this sharp reversal on the downside. But I think, see, eventually all the good things come to an end. With this inability to sustain on the upside, I believe that we could go through a process of retracement back to the previous breakout zone that is placed around 11,800 levels. So I think that is also a zone where the midpoint of the current Gantt channel lies. So yes, a retracement is on the cards, but to create shorts from here on the index won't be the right approach. It does not match my risk reward category, risk reward profile, because we are already 150 to 200 points down in last couple of days. It does not make sense to create fresh shorts on the indexes of now. In fact, I would look for creating fresh longs at lower levels.
So you're going long at lower levels. Pritesh, so you're going long at lower levels, right? If you're not going to go short, can you give us some targets to watch out for?
Yes, around 11,800, 11,850, wherein the midpoint of the Gantt channel lies. I would definitely look for buying opportunity, creating longs. If there is sign of reversal in the shorter term time frame, I would punt on betting a reversal rather than playing a short from here on.
Okay. What about individual stocks, Pritesh?
Yes. Now see, Bank Nifty has been quite volatile of late. And it makes sense because the street is extremely chaotic right now. It makes sense to be in a stock where there is, where the stock is gradually moving higher, and that particular stock is Kotak Bank. Kotak is attempting to break out from a 2-month consolidation band right at the top, and on the PNF chart we can see the stock making a triangle breakout, a rising double top breakout. There are plenty of positive things to talk about on the charts. So buy for a target of 1760, and there is one position short which I have lined up, that is a short on PFC. So the point is, it's a classic case of a false breakout. Earlier back in November, the stock made a breakout above the HNS pattern. It failed to sustain about the 3-digit Gantt number of 121, and that led to reversal. Now we can spot double bottom cell breakdown. We can also spot a turtle breakdown on the point and figure charts. So I am expecting a target of 100 rupees on PFC.
Okay, we'll watch out for these names as well. What else? In today's session, by and large, things have looked slightly wobbly. Anand, there is a lot of talk going on about how the budget will do a few things, get some commodities under the ambit of the GST, some will be still left out. There was some talk about gas yesterday and how it might naturally give an advantage. How worthwhile not to believe most, but any thoughts that you have with the presumption that some of these might turn out to be true, say for example in the oil and gas plays like GAIL and the others?
Well, certainly if gas comes under GST, it will be good overall for the sector as well as for the government finances. One, it will add one more level of clarity to GST. Right now, many of the large expenses are outside GST, so it hasn't helped as much in the economy. But it will certainly also improve the usability of gas, because you would expect to see a little more rational pricing and pass-through happening because of the fact that it is in GST, and that will make it cheaper for many people to use. So the adoption of gas will certainly be good, and most of the pipeline companies should benefit. One of the themes, Neeraj, which I saw a recent report from ICICI Securities, which was very interesting, was the impact of telecom on consumers. If you assume that the telecom revenues were to go up by, let's say, the collections were to go up by, let's say, 20,000 crores because of the tariff rise. So that has to come out from somewhere, because the consumer is now having to pay another 20,000 crores. And you could have a situation where, for example, you have a small cutback in FMCG sector. Now, given a 20,000 crore replacement in FMCG with the valuation of 50 times would mean that you're looking at almost a 1 lakh crore reduction in market cap there. That's an interesting theme to be looking at if you're looking for areas to go short on.
Okay, Anand, before we thank you, what your view on Yes Bank as well? That stock's been in focus since the time last week they announced their fundraising. Streets now are wary of the quality of investors who have said that they will be infusing funds, and that's coming at 78 rupees, but the stock's not touched that level. And of course, today's fall of 8 to 9% could also be on account of Moody's downgrading one of their instruments. What would your advice be? Because this was the last hope that the existing shareholders had, that if they actually are successful in getting some money. There could be some recovery coming by, but it's not panned out like that due to quality of investors.
Well, this kind of event-driven things are best left to professionals who can manage the risk, because it's more a risk management issue rather than an issue in terms of the fundamentals of the stock. So, from an option perspective, if you want to buy it on the expectation that, things will sort themselves out, it's a perfectly fair trade. But if you're looking at it from an investment objective point of view, my argument is that you don't have enough clarity to be able to make a decision. You are better off staying with the stories which are clear and where you are playing for growth. And if you're a retail investor, to my mind, a PSU bank Nifty Bs is a good option, for example, because it gives you a good corporate exposure, corporate-facing bank exposure, without having to self-select every individual stock.
Okay, while the banking stocks are still weak in today's session, Anand, we leave it on that note. Thanks a lot for joining us and taking us through your views on the market. And the markets have recovered at least mildly from the lower levels. So we are back up at least above the mark of 11,900. 925 is where index is currently trading. Let's move on. There's been a dramatic shift in sentiment around Indiabulls Housing Finance post the affidavit filed by the Ministry of Corporate Affairs. And that's the word coming in from Gagan Banga of Indiabulls Housing Finance. Shafali Malik had the chance to speak to Mr. Banga and questioned him on their plans to unwind the commercial real estate book as well as their loan growth targets. Listen in.
The environment has dramatically improved over the last 3 to 4 working days ever since the affidavit was filed by the Ministry of Corporate Affairs. Whoever is a practitioner in India understands that this is the deepest possible diligence that could have happened on the company, and given the fact that the government has looked deeply over several months into these allegations, which have been floating around since June, and has come up with this affidavit, is the best possible outcome that the company could have hoped for, or any of the stakeholders could have hoped for. And stakeholders are very positively responding. So the monies which were getting impacted because of the sentimental hit due to the PIL and all of these allegations, that those monies have started coming in. I would say that this is the best possible outcome that we could have achieved. It is a testimony on the level of diligence that we do when we give out loans, and I have been maintaining that all of these allegations are malicious, biased. No one has done their research, and specifically as far as this PIL is concerned, I'm on record to also say that even publicly available records have been ignored. Leave aside anyone reaching out to us to seek our side of the story. This affidavit clarifies on all of that. PIL, etc. is a court process. The court obviously has to satisfy itself independently. The company is a regulated entity. Other regulators also conduct regular inspections. So the court will follow its due process. But I think this whole sentimental shift which had to be done, there has been a tectonic shift over the course of the last 4 days, and we are firmly back on the growth path.
Moving away from these proceedings, so what will happen first? Because you've been trying to do both a buyback and a fundraise as well. So by when can we expect these? And are you still going to go in for a buyback, or more inclined towards the ESOP plan? And have you sought any sort of opinion from the SEBI on the same?
So what the board in its last meeting had approved, and subsequently we have already started the process of seeking shareholder approval through a postal ballot, is to raise up to $1 billion through NCD cum warrants, and also for our employees, we are altering the course of our employee stock option plans, which have historically been dilutive, to this new employee welfare trust structure, which has been approved by SEBI, and the regulations around that came recently. So subsequent to that, we can, on behalf of our employees through the employee welfare trust, which is an independent trust, can buy up to 2% of the company's equity every year. We have sought approval for shareholders for the trust to firstly buy up to 4% over the course of this and the next year. And if that happens, if the shareholders approve both the NCD cum warrant plus this up to 4% sort of purchase from the secondary market, I think that's what the management is intending to do at this point in time. If for any reason the shareholders are not to approve, then we will have to see what else we can do to send out a confidence signal to the market. At this point in time, I think we are looking at both confidence capital and growth capital to come via the NCD cum warrant, and we would also want our employees to benefit, and for that we are setting up this employee welfare trust.
Okay, so Mr. Banga, talking about the business operations, on various platforms in the past, you've said that you're planning to shed off the commercial real estate book. So at what stage is that process, and what about the asset quality issues there? And you're also focused on ramping up disbursements around the retail book. Can you elaborate more on that?
No, the commercial real estate book unwinding has been an year-long process. Over the course of the year, we have been able, at a gross level, been able to either refinance or securitize, or the developers themselves have been able to raise private equity, totaling to transactions of close to about at a gross level of about 10,000 crores. We're looking at, over the next 4 months, another about 10,000 crores worth of transactions to happen. There is tremendous progress. We are talking to banks, we are talking to funds, and every day there is some or the other small traction. I expect the bigger traction to start coming in towards the third week of December, and then because of the holidays, etc., it may slow down towards the end of December and again pick up in January. Between now and March, one is quite confident that about 10,000 crores at a gross level transactions will be happening around the commercial real estate book. We are obviously using all of this liquidity, since we are sitting on a comfortable cash pile. We are using all of this liquidity to ramp up retail disbursements, and over the next 4 months you will see how our presence on the ground across the various construction sites, etc., meaningfully increases. From a market and a home loan perspective, Indiabulls Housing has a massive distribution. So when this elephant will move, as far as distribution is concerned, the market will take much more than just plain notice of that.
So from here on, what kind of loan growth are you targeting, especially with the improved liquidity scenario? Like you mentioned, the environment has improved just in last few days. And at what cost would you be raising money going forward?
So we are raising specific money from banks for onward lending at between 8 and 9%, and then a lot of liquidity is also being raised from the commercial real estate refinance which is happening. So between all of this, we hope to get back to our historical number, which used to be a run rate of 2,500 crores of retail disbursements a month, up from about 1,000 crores. So I think over the next 6 months we will traverse that path, 1,000 crores a month, which we have been doing over the last 6-7 months, increasing to 2,500 crores. Every month we will keep adding a few hundred crores of disbursals. The nature of these disbursals is also going to change. We were more focused on doing further disbursements on partially disbursed home loans. Now we are out there looking at new home loans, which is how the market is going to feel the distribution presence of Indiabulls, which is the single biggest strength that we have.
Mr. Banga, a question which is directed towards what's happening at the industry-wide level. So the government recently announced the alternative investment fund for the real estate sector, and from what I gather is that various PE players are also inclined towards last mile funding of some of the projects. So give us an on-ground picture. Are there green shoots emerging in the sector?
Green shoots are emerging. Most of what the government is attempting to do, I'm on record on various forums to say that, I expect the monies to actually flow in the fourth quarter. The more important thing through all of these announcements that the government has achieved is that in the wider real estate stakeholder base, there was this general perception as if the government was almost against the real estate sector. By taking all of these initiatives, the government has publicly stated that they're firmly behind the real estate sector. That itself is the biggest green shoot that one can see, and momentum will come back. My sense is as money starts flowing on a last mile basis, interest rates have also been coming down, so affordability for consumer is increasing. That is bound to flow through to demand. My sense is that from the fourth quarter onwards, segment by segment, the real estate industry would start improving. The stock markets have been doing quite well over the course of the last month or so. That generally has a flow-through impact on even premium housing, which one is starting to witness. So if the markets are to sustain or get better, and if interest rates are to continue to move down, along with all of the initiatives that the government is taking, real estate is going to be in a much brighter spot next quarter onwards, if not earlier than where it is today.
And that's Mr. Gagan Banga talking about business prospects for Indiabulls Housing and the way forward. Stock in today's session, along with the rest of the market, is also trading under. But as we are slipping in trade right now, let's also take a look at whether or not Sharad Dubey has been able to find those Fab 4 stocks for us today. Sharad, good afternoon.
Good afternoon, Devina. The first stock is Camlin Fine Sciences. The stock is up more than 6% today in the day's trade itself. So basically, Phillips Capital has maintained its buy rating with a target price of 140 rupees. They expect that the hedge plant will drive rapid value growth, and also they expect saving in input materials, which will see an expansion of margins by almost 400 basis points. The sales growth is estimated at a compounded growth of 22% for FY19 to FY22, while the EBITDA growth is estimated at 60%. Up next is Bharti Infratel, which is up 6% after fresh longs as seen with the high open interest of more than 9% and the volumes trading at almost 1.5 times its 20-day average. Next stock we see is All Cargo Logistics, which is up almost 3% after in the post-market hours the company came out with the press release that it will acquire 19.43% stake in Gati itself. This will be done via preference shares as well as equity shares. And apart from this will actually also launch an open offer of 26% as per the SEBI guidelines. So that is something which we'll be watching out for. And the company also stated that it will raise 194 crores via the issue of NCDs. And the last stock of the day is Eris Life Sciences, which is up almost 8.2% and seeing its biggest intraday gain in this year itself. And the stock has been highest in almost 4 months. So these 4 stocks are buzzing in the space today. Back to you.
All right, Shara, thanks very much for that. So watch out for all of those stocks that we just spoke about. Just looking at LIC Housing Finance, then the stock is now down about 5% There was a period of a few days where there was some interest in the counter. SBI now is at about 322, had gone up all the way to about 350 just a few days ago and then started to slump from there on. So that's 322 on the stock. Brijesh, SBI or LIC Housing Finance is a trade?
See, if I talk about LIC, Devina, the stock had made the high of 482 or 483, and after that we have seen a profit booking. The price as well as the oscillator, or I would be saying more precisely on the oscillator fronts, it has made the lower highs formation, which indicates more downside. Now, if the stock is not able to cross 434, chances are that stock might drift down, and the downside I am looking is 405 to 407 odd level. Regarding with the SBI has been concerned, SBI after making a high of say 351, now it's been witnessing a profit booking. In today's session, we have seen increase in volume. So chances are that on an immediate basis 328 and 334 are the 2 important resistance zones. So this resistance zone has to be crossed, and then only we can say, okay, the stock has come out from a short-term bearish zone. Otherwise, chances are that stock might drift towards the level of 310 to 312 zone.
Pritesh, Inox Leisure, the stock's at 365. Hit a high, I think about 380 just I think a month and a half ago. From there, completely dull movement on the stock. What's the road forward for Inox, and is there a trade here?
Now see, yes, a couple of weeks back, in fact on 5th November, or in fact on 4th November, the stock went a peak of 391. thereafter it has a different story altogether. The momentum has completely fizzled out. And looking at the way the stock came off from yesterday's peak, it is down by 2% today's trade. I think once it goes below 355, 360 odd levels, which is also the incidentally the 3-digit GAN number 361, once it confirms a close above that, I could see more downside pressure. I won't be surprised if the stock goes back to 340, 345 odd levels. That is definitely selling pressure coming in this counter.
Okay, that's the technical view coming in on Inox Leisure. Pull up Century Textiles, I think that's up about 3%. So holding up in a weak market like today, Century Textiles has seen gains of about nearly actually the gains have just come in the last 5 to 10 minutes of trade. Brijesh, come in here, 486, would you take a bet here?
Still, the momentum is on the high side. If I'm not mistaken, somewhere around 29th, we have recommended to my clients, and it was been trading somewhere around 460 zone. On an immediate basis, 488 is that my target was been given. The first target was been given. And it has achieved today in today's session. On the downside is been concerned, I would be watching keenly 458, 462 band. That should not be get broken. Present rate one can be used for accumulation purpose, and whether on the higher side is been concerned, still the chances are that stock might try to touch 505 to 510 odd levels.
Okay, so watch out for those levels of 500 or 510 on the upside for Century Textiles. The other one, and that's the top nifty gainer today, though the markets have fallen, but this one's been maintaining its gains. Bharti Infratel trading around the mark of 260 thereabouts, up 5.5% in trade. Pritesh, how are the charts for this one looking? Are you convinced with the move that we've seen in the recent past, and would you take a bet here?
This stock currently is going through several external events. There is plenty of news floating around this group, and the good part is the stock is holding on to the initial line of support that is placed around 240, 245, and thereafter the stock is building high, which is a good sign. I am more interested to know how the stock behaves around the levels of 265. That is the semi-annual GAN number. Once it starts sustaining about same, I believe the stock can go back to the previous peak, which was achieved couple of days back. So I think 295 would be on the offer, but I think 265 is a level which I would be keenly keeping my eye on.
Okay, that's the technical view, though in the last 6 months, of course, this has been an underperformer, though it's recouped its losses. As you can see, right from the month of November, we've seen that move coming back for most of these telecom companies. And who would have thought at least Bharti Airtel would be the top performing nifty stock of 2019. It's already giving you returns of about 55 to 56%. Well, on that note, let's bring in our next expert. We've got Deepak Shenoy of Capitalmind, who joins us right now. Hi Deepak, good afternoon. Good to have you once again on our show. Well, the markets today seems to be maybe reacting to yesterday's shocker of RBI, but looking at one more data point which was released by RBI yesterday, Deepak, and that's consumer confidence. It's further dropped in the month of November, which is telling you that the people are still pessimistic about jobs and the general economic situation, though markets could be where they are. Of course, we are close to record high levels, but would you buy the argument that the growth levels have bottomed out and we can expect some recovery, or there is more pain left in the economy?
Well, I don't know whether this will be more in in fact, there is pain going on right now, and the markets are at an all-time. So we actually have
Deepak, we'll connect back. The audio right now is not clear. We'll connect back with Deepak and take his views. Meanwhile, let's just address a few more stocks. And HDFC, pull up that stock. We were highlighting how heavyweights have fallen today from the likes of HDFC as well. Brijesh, on the charts with a fall of 2.5% to 3%, almost 3% right now. Would you take a short bet here?
Rice can be used to going short, or even at the present rate. Right now in cash level, it's been quoting somewhere around 2263, 2262 around. 2310 to, or I would be saying 2305 is a level to watch very keenly. So keeping that thing at the stop loss, if someone wants to go for a sell side, they can go. On a downside, it has a support at 2205 to 2208. And suppose if we are giving close this level of 2205, then another 50 points can't be ruled out on a downside. So definitely chances are that 2305 would be acting as a tough resistance, and a sell call can be generated on it.
Okay. I want to draw the viewers' attention to a particular chart of Maruti Suzuki. That stock is down about 124 or 0.6888 for a Maruti currently. But just look at this chart, and it was used on the afternoon show Hot Money, which indicates that maybe, just maybe, there's a case for a trend reversal building on Maruti Suzuki. So watch out for this one. I mean, it's had some gains in the recent past, but after hitting about 7,700 in the recent past, Maruti Suzuki has certainly come off. And let me just walk across and show what our viewers, what we're trying to say. So 2 points out here for Maruti Suzuki. One, it's substantially off from the points of resistance or a point of support. So that is part one. But this, okay, this is the chart that my producer is trying to highlight. Look at this white line, this trend line, and it shows that we are nowhere within the support or the resistance zone. So yeah, this is the chart that the red line is the resistance zone, the green line is the support zone, and we are midway in between. So there's no necessary cue out here for that. And then the more important piece, which is the trend reversal. And again, out here, as you can see, this is the stock price chart of Maruti, and it's coming off and it's breaking below this convergence of the support lines and the trend lines, as a result of which, in technical parlance, it might be said that maybe, just maybe, there could be some downsides on this one. Brijesh, at 6,888 on a Maruti, is there a trade that you would initiate?
See, Neeraj, daily chart had made the lower high, so do weekly charts had made a lower highs. Now, at the present rate, the rate to watch on the higher side would be 7,020 and 7,090. These are the two important points to be watch out. If someone wants to play a BTST, keep a stop loss of 7,020, go for a sell side and look for the target of 6,700 and below. But positional bet, if someone wants to play, then look for a stop loss of 7,090 and play for the target of 6,350 to 6,400. And if we are giving closing this below this level of 6,300, we are inviting for 5,800 also. So overall trend, daily and weekly, both are indicating downside right now. Sell signal has been generated, so one can go short on it.
Okay, that's Maruti for you. On the weekly basis, it's been down about 5%. Deepak Shenoy is back with us. Deepak, we had you on a poor line. You're back with us. Go ahead, share your thoughts with us on what's happening in the markets currently.
Sure, I hope you hear me better now. This is, so we've a bit of the market, showing us that it's very close to an all-time high. Consumer confidence remains, low, both from the RBI survey and, I mean, anecdotally, there is not quite as much consumption happening, whether it is vehicles, whether it is much of the other things. I don't think we've seen much of the bottom yet, but money is continuously flowing, whether it is the US QE, whether it's the QE in Japan, the QE in the ECB, or in fact India also is having a QE right now, with the RBI making the banks actually fairly flush with cash. We haven't had a rate cut, which is surprising. But all this money is perhaps going more towards investment rather than consumption. It's basically going to those people's pockets who aren't actually consumers but more investors. So it may be mutual funds, it may be institutions, it may be the private investors, but it's not really going to the economy as spending. So that dichotomy doesn't last too long, because both of them eventually have to make up to each other. So I think precarious from a point of view of whether you should go all in, but typically such times need an external liquidity event in order for things to come crashing down. So you've got to watch out for some big, extremely big IPO or some extremely big liquidity event that sucks money out of the system. Otherwise, I think the markets are going to remain where they are. The economy is going to take at least 6 months to a year more to start to show some recovery.
Right, but so in the period between, what kind of investments do you advise?
I think at this point you've got to start taking bets on the kinds of stocks that have fallen a lot. While the markets are at an all-time high, we continue to see extreme bearishness on auto. We see some certain bearishness on pharma. There are some bets over there where you can take it, especially in auto. But also in a number of other places where you're getting actual growth, which is the internet businesses. There are certain few of them that are listed in India. There are companies like IRCTC, for instance, where growth looks almost like a given in the next year, given the fact that they're a monopoly in their business. Revenues are likely to double with their new service charges and so on. So there are some bets over there, I think, that we can place on an individual basis, but I would stay away from some of the overpriced FMCG stocks. I would stay away from some stocks where I think where in the financials you got to be very careful of who you buy right now, because there's going to be another financial shakeup in the system almost very soon with the DHFL resolution and with perhaps whatever's happening in the broker cases when it finally kind of evolves.
Okay. Deepak, stay on with us. Lots more to chat with you about. But in the meantime, let's also get in a quick check on what dealing rooms are recommending this afternoon. We've got Darshan Mehta joining us with his channel checks for the afternoon. Darshan, good afternoon.
Good afternoon. So one of the stocks that's been spoken about is State Bank of India. It's down almost 4.5%, almost 5% now. Tried to find out what's going on. So a couple of dealing rooms did indicate that they have heard murmurs of a weaker bank being merged with the State Bank of India, because that bank is in very, very poor critical condition. And that's one of the key reasons why, despite being extremely strong for the past few days, sudden sell-off has happened in SBI. So we're watching out in any kind of development that's happened. GAIL, obviously, on the charts is extremely weak, hit at a 52-week low. Again, a large AGR penalty fear is there, like how we've seen with the telecom. There are these other government agencies that also have telecom licenses, like ONGC, GAIL being one of them, and a large AGR penalty is something that the street is not liking at this point of time. So that's something that is looking weak right now. Two stocks, at least on the banking side, in which there is a bit of accumulation by the domestic funds. Kotak Mahindra Bank, extremely strong in a very, very weak market. When the Nifty Bank is down 400 points, is up almost 1.5%. And HDFC Bank, the largest private sector bank, has managed to hold out. So in a market where things are falling significantly and there is stress, some of the older names, more quality names, are seeing a little bit of accumulation.
Okay, Darshan, thanks very much for that. So watch out for all of those names. Kotak Mahindra Bank, I mean, the one that Darshan highlighted, is holding pretty steady in the session, 1674. Brijesh, a quick word on Kotak Mahindra Bank?
No doubt on a chart, the stock has been making higher tops and higher bottom formations. It's trying to surpass its previous swings highs of 1682 or 1684. But since overall trend of the market is a little bit down, so I don't think so, the stream would be there on a bull side. Still, if someone wants to go long on it, keep a strict stop loss 1655, play for the target of 1695 to 1700. And if we are able to surpass 1702 then we can see a stock even can touch 1720. But purely for a trading bet, 1655 would be your stop loss, play for the target of 1700.
Okay, that's Kotak Mahindra Bank for you. Just want to highlight some stocks which have been holding in the broader markets, and one of them is BF Utilities. It's up almost 10% in trade, and that's locked in upper circuit. The circuit limit is about 10% for this one. Eris Life Sciences too has had a good day at a time when markets have been falling apart. So you've got Eris Life Sciences sitting with gains of about 6 to 7%, and Sadbhav Infra Project too has risen as we speak, since this is the subsidiary of Sadbhav Engineering. Let's see if there are any gains coming in for Sadbhav Engineering or not after the subsidiary moves higher. No, not really. Sadbhav Engineering is still sitting with cuts of about closer to 1%. Deepak, of course, we know that the rally so far has been polarized, but just asking, if somebody wants to deploy fresh capital, would you advise them to enter markets right now? One should wait out for some signs of recovery now for the economy.
So, in general, if a person has capital to deploy, there is only one way to kind of time the market. If you aren't a professional investor, the idea would be to just put money in in consistent chunks over a period of time, say 6 months to a year, and deploy that money in chunks rather than one at one time. We are not in any way crashing from a market perspective. There's only like 0.5 or 1% below the all-time highs. So there should be no hurry to deploy. Considering economic data is not so great right now, and you could deploy this money over time. Having said that, markets can be irrational for very long. So it doesn't make sense to miss the bus entirely. So you do it in chunks. It just makes you feel a lot better. If you were a professional investor, you probably wouldn't be asking this question in the first place, because at this time, like I said, there's always good stocks to buy. Don't look at investing in the market per se, look at investing in specific stocks. Like I've said, there's always going to be stocks that have been beaten down, sectors that have been beaten down in such a crisis, in such a time. We have seen a lot of companies down 50, 70%, some of them have 10% dividend yields, reasonably cash-rich companies growing at 10, 15%, market a PE of 4. I don't feel that this is a market where you don't have opportunities. So there's enough opportunities, you have to be selective. If you don't know where to put it, then just deploy it in like a market index over the next 6 to 12 months in equal chunks. That would be my, that would address both sides of the market.
Maybe passive investment will be a better way to go about it, at least in the near term. But just 10 minutes to go for markets to shut shop. So let's get you some closing strategies for Monday's trade. Brijesh, coming to you, any BTST or any STBT?
STBT. If you check it out last half an hour, the infra stocks, the pharma stocks are starting getting corrected. Now in that, Cipla is looking weak on the chart, somewhere around 455. The stock has been quoting, and 440, 485 to 488. The stock had finding a resistance, and in an hourly chart, the oscillator had with the lower highs formation, which indicates the short side. So one can go short right now with the stop loss of 464, for the target of 443. Another counter would be SBI. Now SBI 200 is simple moving. Which like play for the target of 309 or 310. One can go on a sell side at the present rate of 319 with a strict stop loss of 325.
Okay, that's a sharp fall actually that's come in on SBI, especially at a time when markets were talking about unlocking of business value with regard to SBI Cards business through IPO, or even AMC, their stake in UTI AMC. Okay, Pritesh, your thoughts, your closing strategies first for Monday's session.
Now see, during this period we have to identify which are underperformers and outperformers, and consumption space is a big time underperformer for me. Whether you look at something like Maruti, whether you look at HUL, in fact HUL Maruti, they hold the highest weightage in the Nifty consumption index, and this space I think could see more of downside pressure. So I think one stock which we would like to create short on is HUL. If you look at the ratio of the consumption against the Nifty index, I think it is weakening on a broader charts. We can see more downside pressure. Similarly, on the standalone chart of HUL, we can see more pressure once the stock goes below the recent low of 2002. That could be downside opening up. We can see levels of 1920, 1913 on HUL. So that's a short for us.
Deepak, just one word, because I see on your website a couple of days ago you guys wrote about Ujjivan Small Finance Bank as well. Now, stellar subscription response to the IPO. Is there merit in trying to own the currently listed space with the belief that at some point of time there might be either a reverse merger possibility or then some other forms of corporate action could happen? Would you do that at all?
So it's a complicated question. I think one of the things here is what does Ujjivan Holdings do? All it does is hold the small finance bank. It owns about 80% of the bank, and it has to bring that down to 40%. In the process of doing so, it will not be allowed to reverse merge at least until I think Jan 2021. At least till that time, I don't think they will be allowed to do any reverse merger of any sort. So they also have to bring down the ownership to 40% by that time, which means that they will have to sell stake. In the process of selling stake, they will make a profit. If they sell at 37 or 40 rupees, they will make 30 rupees profit per share. That profit will have a capital gains tax of about 20% according to me, because they are a special case where they haven't paid STT on the purchase of the shares, so they will pay a higher 20% there, and another 20% as dividend distribution tax when you actually try to pay it out as dividend, or if you want to do a buyback. Either ways, you are losing 36% on any gains made from now to 2021. And if the company's intent is to distribute whatever it makes on it. So I believe a minimum discount you'll see is 36%. In general, in such shares, we have seen as much as 70% discounts. So I believe a 50 to 55% discount is valid for the near term. Whether the reverse merger will be allowed between two public entities and the promoter and the bank itself, I don't know, because a lot of times you may not be allowed. Actually, the RBI rules are still to reduce ownership over a period of time, because after 5 years also you're required to have a minimum of 40% in another rule and a maximum of 40% in another rule. So it's a little confusing, but effectively a lot of both SEBI and RBI will have to give an okay to this merger before the NCLT decides on it. So I don't think anybody should hold this share with the holdings company with the hope that there will be a reverse merger and so everything will be hunky-dory. It may take a lot of time. IDFC has to do it first. If IDFC is successful in doing it, once it sells off the mutual fund business, I think only then will we see a precedent like this, and then we can expect more. Till then, I wouldn't bet on the holding company, and I believe we'll have a 50% discount for a significant period of time.
Okay. Deepak, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your views. Have a great weekend. Well, last couple of questions to our experts. While the markets have come off, just take a look at something which is done well. ICICI Securities with this 3% odd uptick is trading at fresh 52-week highs for itself. With all the others like Motilal and a few others coming off, ISEC has had a good run and trading near those highs. On the charts, Brijesh, ICICI Securities.
Neeraj, volume are indicating upsides. 339, 342 level should be kept. A stop loss or any dip below can be used for target of 75 and 385.
Okay, just a quick chart perspective, Pritesh, on a couple of names which have done well today. Eris Life or Narayana Hrudayalaya. Both of these stocks have had a good move. Any one of these? Quick answer.
Now see, I won't, in fact, I'm not tracking Narayan Hrudayalaya, but Eric Life Science looks interesting. The stock has formed a good base and is breaking out on the upside. I would like to chase these kind of counters, especially during the time when the market is not doing well. So this stock definitely has more legs on the upside. We can see levels of 520, 525 also.
Okay, Jaman, stay on. We'll take in closing thoughts from you, but here's how the markets are shutting shop today. Not all that well. 2 days on a trot now. You had the Bank Nifty succumb to selling pressure and closing down over 1%. So now 3,300 or nearly thereabouts. The Nifty comfortably below the 12,000 mark, 11,917 in fact, and the Sensex to about 330 points lower in trade. So the end of the week hasn't been particularly great. Neither has been good for the mid-cap and the small-cap indices. The mid-caps in particular, in fact, 1.5% lower. Pretty painful today for the broader end of the spectrum as well. But let's take a look at the large caps first before we talk about the mid-caps. Bharti Infra, and as volatile as a stock that it can get, up about 5.5%. Kotak Mahindra Bank up about 1.5%. JSW Steel, Tata Steel, commodities bounced back a little bit. Reliance 2 in the green, and HDFC Bank just about holding itself. For Yes Bank, the downgrade 10%. It's been a steady trending day lower for Yes Bank. Started off 2.5% lower, ending 10% lower. SBI is that big disappointment today, down about 5%. Z, IndusInd Bank, GAIL, etc. is all okay. You also have HDFC, which is contributing, and autos have really been pummeled out of shape today, or rather, as a pack, it's gone down because Tata Motors, Mahindra, Eicher, Maruti, all of them correcting in the session today. broader end of the spectrum too, Navneet, I'm guessing would have seen enough pain today.
That's right, Neeraj. Even the market breadth was not looking great at all, but still there were some gainers which stood out. So let me start off with them. BF Utilities, we've been highlighting on the show as well. That stock's closing with upper circuit of about 10%. You've got Eris Life Sciences, which had a good session in a weak market like today. So the stock's closing off the day's high, but still with healthy gains of 7%. Century Textiles, this one rose in the last hour of trade. So some buying definitely coming in for Century Textiles at lower levels, closing around the day's high mark. Berger Paints was the other one. Remember, the futures of this one were trading at a discount. That discount has been bridged. However, with markets falling, you did see the fall coming from the higher levels. At one point of time today, it was up 4% too. Colgate was the other one, which right from the word go was witnessing some buying interest, and it managed to sustain that, closing with gains of 2%. On the losing side, Omax was down 20%, locked in lower circuit, touching 52-week low in today's trade. Not good going there. And banking stocks particularly were weak. RBL Bank, which closed its QIP yesterday, today slipped below the QIP mark as well of about 351. The stock's closing at 338. PSU banking stocks were weak, so you had Bank of Baroda among them, which was down 5 to 5.5%. Among the financials, LIC Housing was the other one, which tumbled about 5% in today's trade, and also Indiabulls Housing, which did not have a great session. These are high beta counters. When the markets fall, they too tend to fall with that, 4% lower. And CSP Bank, which was listed day before yesterday, also succumbed to selling pressure after touching levels of 315 in the recent past, 8% lower here. And Inox Wind, which has been moving higher, maybe witnessed profit booking today, and that's closing with cuts of about 7 to 7.5%. And it's not a great close that we're seeing today, Davina.
Not at all. It's we're down below that those important support levels. The 20-day moving average, we had not managed to scale that back up, about 1% lower on the index. Nifty Bank losing more than 350 odd points. And we'll quickly look at the weekly close and how that's shaped up, because this week has been turbulent and we're down almost 1% for the entire week. What's gained though, however, is Kotak Mahindra Bank for the week is the top gainer, about 3.7% higher. TCS follows that, it's up about 3.5%. Infosys, ICICI Bank continue to see some buying. And amongst the losers, what didn't do too well was Yes Bank. Very volatile swings on the counter, and the stock was down 20% this week. Eicher Motors lost about 8.5 odd percent, and then you've got the likes of Coal India, Tata Steel, Bharti Infratel, which looked weak too.
Well, Nifty down 1.1% for the week. Let's also take a look at the broader markets and see how the mid-cap index was. So, right, 3% lower for the week. That's for mid-cap index. And let's just first take a look at the gainers. You had Prestige Estates, which gained about nearly 8%. Oberoi Realty also did well. Stocks like Mindtree gained because of its analyst meet positive takeaways, where they mentioned that they have retained the client base after L&T took over. Bata India also performed well, and you had a couple of stocks like Apollo Tyres. This one went up in yesterday's trade, and Max Group companies have been in focus, and this gained about 3%. On the losing side, JSPL down 13%. Concerns around Gare Balma a coal block allocation, and you also had stocks like Union Bank of India, BHEL, NBCC. These are all your usual suspects when the market falls, and also something like RBL Bank, after completing its QIP yesterday, in fact today closed below the QIP level mark, 10% lower for the week.
All right, global markets are still trading positives. This is a move that we've charted on our own accord. But let's also focus on Monday's trade now and what lies ahead. Pritesh, let's start off with you and what we need to keep an eye out on come Monday.
Now see, what we have seen so far, the most disturbing part in this week's trade has been the underperformance or decline of the mid-cap index. This space was holding pretty well, and it gave a close below three-digit GAN number of 16,900, which is a big concern for me, because if you look at the developed markets indices of the mid-cap side, whether you look at MSCI Europe mid-cap index, whether you look at MSCI World mid-cap index, they are trading around that multi-year high, multi-month high. But our index is lagging behind. So I think it's a bit of concern. I would be keenly watching on the levels of 16,300, because I think I'm expecting for this mid-cap index to find some sort of support, and from there on reversal would be important.
Brijesh, what about you?
See, I think, as I have said in the show earlier, like I'm looking Nifty weak, and chances are that 11,800 is a level from where the bounce back would be coming, and on a higher side, two important resistance zone I would be watching very keenly. One is 11,080 and another is 12,050. Now these levels If they are surpassed, then we can see Nifty again back to the level of 12,150 plus. Otherwise, I am looking Nifty at least, going first touching a level of 11,800, and after that consolidating the range of 11,800 on downside, followed by 11,980 on the higher side.
Okay, gentlemen, we'll leave it at that. Thanks very much for joining us this afternoon, sharing your thoughts with us right here on the platform. Also, with that, we come to the end of Countdown. Thanks very much for watching. From Neeraj, Navneet, myself, and the entire team that's put this show together, thank you so much for watching.